Hello, good afternoon. You've tuned into CNBC-TV18. You're watching Your Stocks and I'm Vinny Motiwala in the Mumbai studio. Now, this is a show where we solve all your stock-related queries, so we will get to that. But before that, let's take a quick look at the market. A recovery that seems like is coming in for the market, recovered from the day's lowest point, 23,600. About that mark is what the Nifty is trading at. And now the decline is just 0.2% of decline is what we're seeing, 23,650. Sensex, 78,000, about that mark as well. So keep an eye on the sensex as well. It's just down 0.2% in trade. Look at the mid and small cap, that still is seeing a decline, but that also has seen a mild recovery that we're seeing coming in for the mid and small cap as well. It's mild, very mild recovery for the mid cap and similar for the small cap as well. It's still down 1.8%. Just trying to make that up and coming up from the day's lowest point. We'll keep an eye out on that one. Nifty Bank, we saw that chart also popping on the screen. So Nifty Bank is also seeing some bit of a recovery coming in today's trading session. Now, while we spoke a short while ago, that time we were seeing all the sectors that were trading in the red at around 1. As of now, we have FMCG and IT. That's somewhere IT is just flip-flopping between the red and the green. Let's keep an eye on that. But FMCG has moved on to the green side, 0.2% of gain. IT almost 0.1% of gain is what we're seeing coming in for the Nifty IT. So interesting to watch out for in terms of the recovery of the market. And, will this continue in the second half of this trading session is something that we're watching out for. But on that note, let's bring on our experts for today who are here to solve all your stock-related queries. We have Shahina Mukadam, independent expert, as well as Vaishali Parekh, Vice President, Technical Research at Prabhudas Lilladher, joining with us to solve all those doubts. Vaishali and Shahina will be joining in with us as well. So, let's wait out for that. We have Vaishali who's here. So Shahina will be joining in with us from a short moment from now. Vaishali, good afternoon and thank you so much for joining in with us. Let's just talk about what the market is looking right. At one point of time, just an hour ago, when I looked at it, seemed like that fall was not stopping. And now we've seen that recovery coming in the benchmark indices. What is that indication coming in on that front? Any technical levels that we're keeping an eye out on that will be important as a factor right now?
Definitely. Good afternoon, Vinny, and thank you for having me at the show. So yes, market is going through a lot of choppy moves, but technically speaking, Nifty has still managed to hold on to its previous support of 23,500. So unless and until we see a decisive break of 23,470, that was the previous precise low that I would talk about. Unless and until we see a decisive break of that, I think market is going to hover around at these levels. And the upside right now is restricted to 23,800 levels. As far as Bank Nifty is concerned, well, it is comparatively weaker and the prominent support for now lies at 49,000. So today also we came pretty much towards 49,500 and from there on we are seeing a bounce. But what is important is the energy index is supporting the market, that is ONGC Reliance. So I guess market should continue to be in the range.
Okay, markets will continue to be in the range. That's the word coming in from Vaishali. But on that note, let's get started with the stock-related queries. And this first query we have is coming in on Cochin Shipyard. We have C. Krishna Mohan who's writing to us from Kerala. He's holding 20 shares of Cochin Shipyard at a price of 1,321 rupees. Wants to know whether to hold or look to sell this. Vaishali, what's your view coming in on this one?
So I would say right now, of course, I think he is in a profit, if I'm not mistaken. Near-term support lies at 1420. So as long as the support of 1420 is held on, I think he should wait it out because once we see a move past around 1530, 1550 levels, this can go towards the next target resistance of 1650. So I would say hold with a stop loss of 1420.
Okay, hold with a stop loss of 1420. That's the word coming in on Cochin Shipyard. Surely an important one to watch out for. Let's move on to the next query for today. We have this query on Adani Power. We have Karan Singh, who's writing to us from New Delhi, holding 100 shares of Adani Power at a price of 595 rupees per share. Wants to know whether to hold or look to sell this one. 595 is the purchase price. Currently, the stock is trading at 506. So they're making a loss here. Vaishali, what's your advice coming in for Adani Power? On the technicals and on the charts, what is that looking like? Last 1 month, quite a muted move down 6% in trade. But what should we be watching out for on the levels?
Yes, I agree. The trend has weakened, and from his buy price, the stock has really fallen down, and there is no clarity in the trend. But in the near term, as we were talking about, there is a consolidation happening. So now that if he's held on for so long, hold on with a stop loss of 490, because if we see a move above 530, the stock moving above 530, in all likelihood, he will get his buying price again. So hold with a stop loss right now with 490.
Okay, that's the view coming in on Adani Power from Vaishali. We also have Shahina who's joining in with us as well. Shahina, good afternoon. And, I'm going to come to you for this next query we have is this query on Adani Power. On the fundamentals, how is it looking like? Because the viewer is holding 100 shares at a price of 595. So they want to know the future prospect of this one, whether they could hold or sell this one, Shahina.
Well, see, he's already making a loss. And if you saw the first quarter after the second quarter numbers, the stock has corrected. They didn't really do particularly well in the first half. Now, second half should be better, both in terms of volumes, in terms of realizations. And this should support the price at current levels. Having said that, I think, the group there's a lot of debt on the books, even of Adani Power. And going forward to fund increase to, the capacities, certain acquisitions, I think they're going to have difficulty or higher cost in terms of fundraise. So what I would say is that keep a stop loss, keep a very strong stop loss, and maybe close to about 500, 490, and switch.
Okay. That's a view coming in on Adani Power. Let's move on to the next stock, and this one is Bajaj Finserv. Now we have Lalit Saluja, who's writing to us from Pune. They're holding 30 shares of Bajaj Finserv. Price is 800 rupees per share. Currently, the stock is trading 1,700 rupees. They're making a good amount of profit on this one, right? What should they do? Should they book the profits or stay invested in this one? Let me come to you, Shahina, first on the fundamentals. What is it looking like?
See, the stock has not moved for the last 3 years. So basically now I believe, and the main reason that was because of high valuations. It was pretty expensive. Now valuations have started looking a bit more attractive. It is not cheap, but it is started to look a bit more attractive. What I would believe is it is better to hold at current level.
Okay, better to hold at current levels. That's the view coming in. I think we snapped the line a bit, but okay, we'll reconnect with China on that front. Better to hold at these levels. That's a word coming in for Bajaj Finserv. Vaishali, your view on Bajaj Finserv. What should the viewer be doing? Time to book out some profits?
I don't think so. In fact, chartically, it looks pretty attractive. The stock has corrected right from 2000 levels, and now we are seeing the stock bottoming out at around 1580, and gradually we are seeing the stock moving higher. So now on near-term basis, I would suggest this person should keep a stop loss of 1650 and look for a trading target of 1740. Have a relook at these levels, because once the stock moves above 1740, in all likelihood, this stock can go towards 1820 as well. So for me, it is quite appealing. Hold with a stop loss and wait for higher targets.
Hold with a stop loss and wait for higher targets. So hold on is the view coming in both from Shahina as well as from Vaishali for the stock. Let's move on to the next query. This one is LIC. Rupali Bansal is writing to us from Chandigarh, holding 30 shares of LIC at a price of 500 rupees per share, making a profit on this one. Wants to know if she should buy more at these levels. Can she add more? What's the view coming on this one, Vaishali? Technically, does it make sense to keep adding?
Technically, I would say so. Actually, the stock is showing some strength at 570. So this is the level that she should be watching and adding at this level. And of course, this also becomes a very favorable risk reward, because if these levels are broken and if long term is a perspective, then she should add more at also 540.
Okay. And
are you asking about LIC or LIC?
LIC. Just LIC.
Yes. Okay. So I think at these levels, she can add more.
Okay. At these levels, you can add more. And Shahina, your view on LIC? Okay. I think we have lost the line with China. Okay, but the view coming in from Vaishali on LIC is that you can add more at this level. Next query, let's move on to this one. It's on Suzlon. Now we have Shalu Jain, who's writing to us from New Delhi, holding 150 shares of Suzlon at a price of 30 rupees per share. And what we're seeing is that the stock is currently trading at 60 rupees per share. Wants to know whether she should continue to hold this or maybe book out some profit in the stock. And if they book out the profit also, where should they be looking to invest? This one is also what they want to know. So on this one, Vaishali, technically, what is the chart indicating? Last 6 months, we've seen a 9%, 8-9% move. But before that, we had seen a run-up coming in. So Suzlon, how is it looking like?
So Suzlon, actually, if you look at longer term perspective, it's a very good opportunity to add more also. But if she has no interest in adding more, keep a stop loss of 53, because as long as these levels are held on, I think this stock is ready to retest the higher levels of 72 and 80. So in my opinion, these are the stocks for a long-term perspective which look very positive, and 53 should be maintained as a stop loss, because my view gets negated if the stock falls below 53.
Okay, sure. We will keep an eye out on Suzlon Energy and the levels over there. But on that note, we're going to slip into a very short break. On the other side, we'll start with a special segment, the Growth Code, that is an initiative by Grow and CNBC-TV18. We'll address viewer questions on how to navigate the market and make informed trading decisions. So don't go anywhere. Welcome back, and we'll now focus on the Growth Code, a special initiative by Grow and CNBC-TV18. Whether you are new to investing or seasoned professional, our goal is to provide you with actionable insights and strategies to navigate the market and make informed trading decisions. Today, we will address viewer questions and explore how to identify and avoid fraudsters who pose as professional traders, brokers, or financial advisors. And we still have with us Shahina Mukadam as well as Vaishali Parekh to solve all your queries. Let's get started with the first query on this segment then. And this query is coming in from Shreya Sharma, who's writing to us from Noida. Now, she says that she has received a call from someone claiming to be a financial advisor, offering a guaranteed way to double her investments within a year. They asked for an upfront fee as well to get started with. What is that the viewer should be doing on this front? Vaishali, what's your view on this one?
So first of all, in my opinion, and with so many years of experience, stock market never guarantees, because it's all about whether it is fundamental or whether it is technical. It's all about projection. So I don't think the person who is guaranteeing, I mean, there is never a guarantee to my understanding. So I think one should stay vigilant on this.
Absolutely. There are no guarantees ever, and especially in the stock market, there is no guarantee for sure. But, Shahina, your view coming in on this one, I assume that it's a similar one to what Vaishali is saying as well.
Yes, absolutely. Because see, first of all, it is not even legally protected by SEBI, such investments. And secondly, there is no guarantee. In fact, you cannot even extrapolate historical earnings into the future. For equity investments. So there is no question that this is not a valid offer. So definitely the investor should not fall for it.
Absolutely. Do not fall for such calls that you keep getting. And, obviously there's no guarantee in the market. No one can double your money in any amount of time that they say. So you have to be very careful of what you are doing. Let's move on to the next query. We have Priyanka Verma, who's writing to us from Mumbai. Priyank Verma, I beg your pardon, who's writing to us from Mumbai, saying that a trader on Instagram is showcasing consistent high returns from their portfolio and is inviting people to invest through them. They are asking him to send money directly to their account, and he wants to know whether one should trust them or is it a scam. Shahina, this is a thing that happens a lot, right? Given that digital world is surely growing faster, but then it's easy to get scammed on this front as well. What is your view on this one, especially on Twitter, Instagram? All this keeps happening.
A lot of times we've seen that such disclosures by people offering such services is very subjective.
I I think it's a very patchy line. We'll try connecting back with Shahina. But Vaishali, your view on this one. This viewer has surely gotten some exciting offers coming in on the Instagram page, which is showcasing that they are, making very high returns. So does one believe such things? How do you judge what is actually true and not true on this in this world of digital right now then?
First of all, to my understanding, actually, as per SEBI guidelines, one has to have their own DP account. I mean, no one ever will ask for cash directly. So that is one thing that one needs to look into. And first and foremost, you have to see whether the person who's recommending this, is he authorized? Does he have a SEBI registration? And is he opening a PMS? Whether the DP account is going to be opening in his account or no. So these are the parameters, the basic things that one needs to look into. Just random giving away money is never, because capital protection should be the first idea the investor should have, and follow the rules. Do not go into such talks.
Absolutely, do not fall into this. Capital protection should be the first rule as well. Next query, Rohan Shah is writing to us, and this one is from Hyderabad. He's saying that he came across a website that was claiming to offer advanced trading algorithms with guaranteed monthly returns. The site looks professional is what he's highlighting, but he's unsure if it is real and wants to know how do you verify something like this, Vaishali?
So I would say should go and visit personally, see whether all the documents are in place, see the past track record, see how they function, take a view of a few of the investors who have already done so. Because in my opinion, I don't think so far anyone has guaranteed anything. It's, again, I repeat, it's all about projection and the way the market moves. So I think should do proper homework before getting into any transaction.
Okay, it's important to do proper homework before you actually get into any transactions. So please do not fall for any of this. Check the track records is what Vaishali is also highlighting. Physically go and see there, right? The DP, what is their working, what is the history. And then maybe, Rohan, you can look at the website. But yes, be careful with what you're doing. Let's move on. And the next query we have is Diya Bhattacharya, who's writing to us from Kerala. She says that a friend introduced her to an online financial advisor who promises better returns than mutual funds, and they've shared glowing testimonials but no official certification. She wants to know how she can check if they are actually genuine in this front. Vaishali, your view?
The view once again is same that unless and until they are properly authorized, well, I don't think, because there are so many professional financial advisors who are well established, who have a good track record. I think you should choose one from those.
Absolutely. And Vaishali, just, we have to check the track records of professionals. What is important if someone calls themselves a financial advisor? What is the degree, or what is it that we are watching out for in terms of that? Like,
whether
what is it as...
SEBI approved? Do they have the certificate? Are they established stockbrokers? Are they established financial advisors? Have they passed their tests, what they are supposed to be? And are they recommending on basis of that? So that is what is important.
Okay. And let's move on. And Shahina is also back with us right now. Shahina, we have this viewer who's writing to us from Kerala, Diya Bhattacharya. And, what she spoke about is her friend suggested her some online financial advisors. So how could one actually, who's promising better returns than mutual fund, what is it that, she should be watching out for here? What is her view coming in? How can she check if they're genuine?
Well, definitely, as Vaishali said, you have to check their credentials. You can look up SEBI, their approvals from SEBI, which they have, registrations. Also, I think you can also look at what is their track record, if data is available. You could check out what is the financial standing of the corporate if they're representing some company or firm, and also their qualifications. I think that is important. Experience and qualifications of the financial advisor is also important in addition to everything else.
Okay. This other query we have is coming in from Nikesh Mohan, who's writing to us from Chennai. He says that he has been added to a Telegram group where the trader posts stock tips, and he's asked to pay a fee to join the VIP group. However, he says that the profits they post on the group seem too consistent. He wants to know if he should join the group, avoid it. What should be the caution that he should take here on this front, Shahina?
Such groups unless he's absolutely sure as to who is the fund manager over here, what exactly are they offering, and in terms of tips, stock tips, I think you tend to lose money if you just keep following tips like this. It is better to actually work with or invest your money through a SIP if you're a retail investor with a recognized mutual fund, or if you're following some financial advisor, then he should be registered with SEBI, have the qualifications to actually give that advice. So you have to be careful with your money.
Okay, have to be very careful with your money. And Vaishali, your view on this?
Same view, actually. I would say, do it very, very thoroughly before you get into. And I would also say that observe for a while when the track record is good, but go into a paper trade for some days and see if it's really giving you good returns. If there is consistency, then you may try with a calculated risk. Of course, not to miss out that you have to see the authenticity of this person.
Absolutely important to check the authenticity of the person. But, that was the last query for today. So thank you so much, Vaishali, as well as Shahina, for joining in with us on the show and solving all our viewers-related queries, whether on the stock markets or even in terms of individuals, of how they should be aware of what's happening in terms of scams and be alert from that. Thank you so much, Vaishali, as well as Shahina. But quick look at the market, because we've seen the Nifty coming back to the green side. A sharp recovery coming in for the Nifty as well as the sensex. Nearly 1% each from intraday low is what they've recovered. Nifty is at 23,700, above that mark. Sensex also is trading comfortably above the 78,200 level. Keep an eye on that. But with that, we're absolutely out of time on this edition of Your Stocks on CNBC TV18. Thank you so much for tuning in. Up next, closing bell to take you through the last hour of trade.